Ladies and gentlemen, I'm Joseph Novich, Senior Trading Manager with GDM. Today's session outlook, we have a lot to talk about. First of all, Federal Open Market Committee minutes, March meeting. Of course, the dollar fell on Wednesday just after the aforementioned Federal Reserve minutes, and that was, of course, on the pessimistic tone that the Federal Reserve officials are not expecting any changes of immediate interest rates anytime soon. Of course, officials now seem to believe that any boost from President Donald Trump and his plans to cut taxes, lower regulations, and of course increase infrastructure spending won't happen actually until 2018. That, of course, could also boost the other currencies against the dollar, also commodities. We saw gold actually bouncing from 1242 level yesterday. Anyways, right now, let's have a look at the charts here. There is some important events just before I mention about the next fundamentals that we're expecting today. We're looking at the euro versus the dollar. It actually slipped just in early morning trade after, of course, the president of the European Central Bank, Mario Draghi, said current stance at the economy is inappropriate to do anything at this stance. Of course, nothing major so far. Of course, on this statement, the euro initially fell versus the dollar. Not only stronger dollar, as we mentioned earlier on the Federal Reserve Open Market Committee minutes when the other officials from the United States mentioned, as I'm going to quote one more time, that they were pessimistic about the changes for any immediate interest rates anytime soon. Right now, we're looking also at a sideways direction on the euro versus the dollar, 1.0640. This is the support area from where we're going to expect a further downside. And talking about further downside, we could actually see levels roughly around 1.06 and even lower to 1.0570 on the major support areas here. Also, let's have a look at the British pound versus the dollar. Little changed after yesterday's a plunge above the 50 exponential moving average. Of course, nothing major there as well. What we can expect, however, later into the session is the, of course, continuing jobless claims and initial jobless claims for the United States. We're also expecting some Fed officials' statements, and of course the very important meeting that is during the whole day between Donald Trump and Xi Jinping. So, looking at the dollar-yen pair, however, it fell yesterday from levels above 111. We can see that it has dropped back down to 110.40, which is the key support level, and of course it's right now stuck in between this particular range. However, in the near term, a break below the 110.40 could actually test the 110 pivot level, from where we could actually expect further downside to 109. Now, anything special here is in gold, of course. We saw the support level at 1242 to have held its ground yesterday, which is actually down here. But the levels around the 200 exponential moving average and the 50 exponential are keeping gold price in a very tight range. Speaking of very tight range, it's normal $10 range during a daily trading. However, right now we're looking at a support around the 50 exponential moving average, a bounce from it, and of course a break above the 1262 areas. We could actually see some further upside. For a downside direction, we can't really talk about it today, as what we're seeing is a weaker dollar. So in any worse than expected fundamental data, we could actually see some upside on it. Oil prices are also standing above the $50 key area. For now, we don't have any particular information out of the Organization of Petroleum Exporting Countries for anything as a hint or whether they are going to actually expand their production cut program or not. So we are going to keep you up to date to that, and of course I'm going to be talking to you again tomorrow with the very important news coming from the US, the non-farm payrolls, and of course the unemployment rate. So for now, thank you very much for joining us, and I'll see you again tomorrow. Thank you. Bye-bye.